everybody, and welcome to this episode of the podcast where we're talking about financial literacy. So, this is part of a four-part series where we're helping international students and immigrant youth understand how they can thrive here in Canada. And with me here today, before I go on, my name is Chimdi. I'm the host of the Chimdi with Cheat Sheet podcast. And with me here today is Mr. Rotimi Fadipe, who is a real estate realtor here in Winnipeg, Manitoba, and he also has knowledge about real estate across Canada. So today we'll be learning from him about real estate and how that connects to financial literacy in Canada. Welcome, sir.
Thank you very much, Chindima.
Yes, thank you. So for our guests online, we will have a Q&A session at the end where you can either type in your comments and we'll receive them, or you can come off mute and ask your questions. So, sir, to get us started, can you walk us through what real estate in Canada is? Like, how do you buy a home in Canada? Many people might be familiar with what that looks like in their home countries, but how does that work here in Canada?
Well, thank you very much. The beauty of Canada is that it's a very regulated industry. There's a lot of transparency. You have a number of professionals involved in each transaction, and that's just to protect the consumers. Actually, we can readily give comfort that there is no the level of scamming here is very negligible because where you have human being you will see one of transactions like that, but government has so much prepared a system that there are checks and balances all through, and if you work with professionals you are not likely to miss it.
Mhm.
If anybody wants to work against the rule and regulation, there are very stiff penalties that are deterrents, and because you are not working as an individual, you're working under a brokerage, and a brokerage knows what it means for such a huge investment to be messed up by just one individual. So there are risk management, processes there to protect the individual, and I would just say that here in Canada, the law protects more of the, in fact, buyers than those who sell. And
Mm.
that's why, for example, if you're buying, you don't pay any fee to, you know, the realtors. You don't pay it. The law here is more like, oh, it's the seller that is getting money. So the seller will, in fact, be the one to pay the brokerage. And the beauty of it is you have opportunity of free service, because you want to buy a house, the realtor will have to take you to as many houses as you
Mhm.
are in fact pleased with. And this is the beauty of it. You have right of choices, and if you just have a real estate professional that you can trust and you are very loyal, he will guide you through the process, and I'm sure you will be the one to be calling for repeat businesses with the individual.
Yes. And thank you for walking us through how this security is in place, because I can imagine that many people are like, oh, like to buy a house here is like you're seeing 600,000 and you're like, where will I get all that money from first? Like, who can you trust to say you're giving
Yeah.
this amount of money to? So it's helpful to know that those kind of systems are in place to make sure that people are not scammed and frauded of their money, and just trusting that you're working with professionals. And Mr. Fadipe here is a professional realtor, so he can give us actual details of
Yeah.
what's happening. So when, say for example, I want to buy a home,
Okay.
I have that idea, but where do I even start from?
Okay. So I will say it's either you start from a professional realtor
Mm-hmm.
or a mortgage specialist, whichever way you start
Okay.
from, if you get the right individual. So what I will say to you, and because these are learnings, experiences that we've seen with a few individual, not taking it's like, oh, young adults, no, everybody.
Mm-hmm.
And I'm going to be talking about the real financial discipline that the system, require.
Mm-hmm.
So, and it's tied to what we call credit score. So, a number of people do not understand what credit score is. The banker will not tell you. I cannot remember any time the banker sat me down telling me what credit score is. But I want to tell you, if there is nothing to pick home today, please pick that the basis of who you are. of your personality, of your credit worth, of your credibility in Western world, particularly in Canada, is what is your credit score. And the credit score has nothing to do with the volume of money you have there. They are measuring how disciplined are you. And I give you two examples. If somebody has 200,000 in his accounts and another person has just 2,000, believe it, if the person with 2,000 is so disciplined, is so much that he will have higher credit score. And what are they measuring in credit score? They are measuring how disciplined are you about your payments. A major dent on your credit score is missed payments. Let it not be that your landlord or somewhere you have made a contract is reporting you that you have missed payments. And when it goes to liquidation, that's a major problem for you. Now, if that individual with 200,000 feels that, oh, he has money and is so careless with his credit card, every month that the missed payment is there, the credit score goes down and down. And let me tell you, you can have even money in your checking account and your credit card is not well managed. The banker don't want to know that. They are saying this man has promised that he will be paying, in fact, $25 on a particular subscription every month, and he has failed. My, I want to just encourage you, especially this phone. This phone, don't miss it. The phone, I mean, is the most that I've seen affected people because you just think, okay, it's just 1 month, it's just 2 months. Don't miss your phone call. If you know you are not able to do it, go and stop the subscription for the moment when you are able to do it. Because once it gets deeper and deeper, and that is about missed call. A second part of it is what percentage of your limit are you in fact utilizing? The banker says to you, yes, I've advanced 2,000 to you on credit. They are not giving you a loan. I think the point that we must know is that it is not a loan. It is just for you to use temporarily. It is for you to use to conclude a transaction. What they expect you within the period is that that fund will never be maxed beyond 30%. Don't go beyond 30%. And when you have an account, that is what they call minimum payments. Sometimes it can be as low as $20. If you miss it, you are denting your credit score. So when they say minimum payment, don't miss it. And there is always a date where your uh, credit score is, computed. If they give you 23rd, don't say you will pay that money back on 24th. Always save, give a 72 hours period. So if my own expiry date on my credit line is 23rd, I like to return that money by the 20th because the bank have no obligation to do it that 23rd. The fact is even that 23rd they can do it on the 21st, and that is the balance. So don't think, oh, I've just transferred money to this. Sorry, they have already done what they needed to do. If you're also not so conversant with the holidays and something happened, you just paid, maybe the holiday will not come until, the people will not resume until 4 days after. The bank will not treat it and you have been marked off. So I want you to try nothing later than 72 hours. And if it is a weekend, it is an holiday, please put that in place. Because if your credit score date says Monday, for example, and you are saying, oh, in the evening of Sunday, I will transfer money, and there is an holiday on a Friday or the same Monday, the bank can do that computation a Thursday or a Wednesday before that time. So you have missed it. So they are not looking at the volume, they are just looking at discipline. And the basis of every financial discipline measurement metrics here is your credit score. So I don't want you to miss it. You want to buy a house, they are asking you get at least 680. 680 credit score. And there is a way you can always manage it. You know, it's a matter of what percentage of it I've utilized. So if I have 1,000 and I'm using more than 300, you know, you have exceeded it. There's nothing wrong if your bank can increase that 1,000 to 1,002 or 1,005. And when they do to 1,005, if 300 is what you are using, you know you are just going to be clearly less than about 20%. So you are not going to be marked out. But what is also important is that as you do that, make sure you are not missing payments. It's not for you to start accumulating credit score, because the number of cards you are also using is showing that you are financially stressed. It's showing that, oh, this guy has problem. So they are wary, they are concerned, they are just tracking you gradually. So the credit score, please don't mess it up. That is something very, very important. So when you get to a realtor will want to know whether you are financially prepared. And being financially prepared is, oh, I want to sell a house to you. How do you want to repay this money? How do you want to pay it? Oh, they are asking you, yes, do you in fact have an approved, line? Do you have something to say? A mortgage specialist had evaluated your income and your circumstance and is saying, oh, you are able to buy a house for 200, for 300. These are comfort that a realtor will have, so that you don't even just make the realtor running here and there, and when it's time for you to conclude, somebody say, oh, sorry, you are not approved for it. So it is important that you take cognizance of what your income is. Take cognizance of what is your credit status today. Have I taken credit, student loan? Have I taken other loans that are impacting me? And I always want to guide people. Please, this system is credit based. Don't take undue advantage of it. Oh, let it not be that you want to buy shoe, you want to buy this, because there are as many banks as there are, shops here. You go to an automobile, it has a credit card. They give you, and you think it's free. It's not free, please. It's not free. Some of these malls, I don't want to mention names. You go there, they say, oh, come and take this one. We give you 200,000. 2,000, 3,000. Can you sit down right there and just ask yourself, when did they become Father Christmas to be giving money out? So there is something underneath that cannot be for your advantage. You see their staff, in fact, more like pleading with you. Please take this. Oh, you have 300 there. You have 500 there. I want to plead with you. Please, as much as you can avoid it, run away from them. Just stick to that bank. One card that you have is enough for you. By the time you are tempted to want to take a second one, a third one, then you probably are chewing more than your mouth can accommodate. I don't want you to go beyond the limits of what you are able to do, because when it comes to repayment, are you in fact getting that income to be able to allow you to repay? Now, when you talk about even credit line, there is a percentage that your monthly repayment cannot exceed if you want to take a mortgage. So what they are saying is, okay, if I give this lady this mortgage and he wants to repay, will it not bring stress to her life? Will she be able to cope again if suddenly with the mortgage it turned out that she has to be paying as much as 60% of her income? You know, there's problem. She will not be of good productivity even now, because most challenge will be thinking about how to manage for. So government has created a minimum limit that is say, okay, if what I'm going to pay for mortgage, what I'm going to pay for other statutory bills that are constant will not exceed a particular amount, then maybe this person will be able to survive. Okay. That's what government have done. So that you are not buying a house that you don't sleep in the house because you now need to walk around. So it's a thing that you are building wealth. But if you do it sensibly, you will build that well and you will be surprised in a couple of years. This is what I have come. Because real estate is an investment that is to perpetuity. It's an investment to perpetuity. When you go through the major streets in town, you will see houses that are 150 years old.
Mm-hmm.
And you just imagine how many generations have made wealth from that property.
Yes.
That's where you understand when we talk about real estate. That is something that it cannot be exhausted in a form, in a way. And that's why even accountants, they will not depreciate property. They will depreciate it the way they depreciate every other asset. So when you get it, you're not just making profit, you are making capital appreciation. And that's one you cannot even say how much. And the beauty about real estate also is, you work on leverage. It is tax efficient. You can build a lot of equity that nobody can tell you this is the limit. It is just what is the economy saying. When there is inflation, the real estate is enjoying. In every situation, I mean, more like you are protected. There is like a steel wall built around you when there are problems. So what people say about real estate, oh, it's not liquid. I tell you that part time has gone.
Mm.
Because if you have a good house that is well maintained, you want to sell it, you are going to sell it within a month. You are going to sell it within a month. I mean, those are the beauty about it. And look, uh, you want to compare with other investments. I don't just want to mention names, but in terms of volatility, in terms of risk element, this one is easy. People have bought into stocks, they have bought into ETF, they've done so many things. They're going to be managed by people, some of them who may not be too transparent. And whatever their decision is what you will carry. But when you have your real estate, you are part of it. I mean, to a level that you start growing gradually. And when it becomes big, that you become a real investor, then you can build a wall around such a volatility to make some big buck, as you move forward. So I want to encourage as many as are privileged, as many as have the opportunity to go through it. So that is the process when you now find as okay, I have a realtor, the realtor is comfortable with you, so he will set you up on a platform. And we have a platform, and that's the beauty of coming through professional. So you have access to as many property as are publicly available that meets your specification. And when I speak about specification, your budget is the first one. When I speak of specification, I'm talking of the type of house you want, the location you want it, what is the mode. Do you want a bungalow? Do you want a condo property? Do you want a style that is just single family owned? So these are things that you would have taken time to discuss extensively with your realtor and is able to decide which location in the community do you want, what are the facilities you're looking for. Is able to make great decision with you collaborating and decide to set you up and on a regular basis as much as you want, including if you want it every day. Mails will come to you showing these properties, and you can access the pictures, you can access videos, and it will be your lot to tell your realtor that, oh, can we go inspect this house? Because you have that privilege. And when you go to inspect the house, you are able to look at it because sometimes pictures may not give just exactly what you're looking at. And then when you move to that place, you have the advantage to, in fact, evaluate the neighborhood. You have the opportunity to evaluate the community, and then you are just juxtaposing that with the physical inspection that you have just made by yourself. And then you are able to tell your realtor, oh, I like this house. A realtor worth his salt is going to be able to go in to do evaluation and say, yes, they have listed this house for 200. Maybe we should just give an offer for 180. Maybe we should give for 190. Sometimes he's able to also tell you that this house has been deliberately undervalued. It's been listed well below the market price. What are some realtors looking for when they do that? Or what are some sellers looking for? Some sellers are looking for an opportunity that will be beat. Of course, when you list the house for 180 and people who come there feel that that house is actually more than 180, then you will see 20, 30 people wanting to buy the same property. And in the process, the price will go beyond the 200,000 because, I mean, somebody is not just making a decision, say, oh, I want to buy for 40,000 higher. He's saying, look, this property is indeed truly worth more than 200. But this 40,000 that I want to add to it, I think I will reap this 40,000 because they are not asking you to bring the 40,000. So what you will put in immediately will just be 5% of the 40,000
Mm-hmm.
if you are doing the 5%. But I mean, if you feel that's really worth it, some people will go that much. And that's why I want to plead with you. Trust your realtor and open up to the individual exactly what you want. Don't have, if you do not trust him, you don't need to engage a realtor if you don't have that trust. So just say all that you want. A very professional realtor will exceed your expectation, and that's what we do. That's what I do to say, okay, I want this person to be happy, so that when this transaction is completed, he or she will be willing to tell somebody about me, tell somebody about our business. And so I want you to see it. The job of finding a house is collaborative. You do not know more than the clients, I mean, the realtor that is taking you through. Just release all the information that you have about your circumstance, about what you want. Are you looking for it for a long time investment? Are you looking for it because you just need quick money? So these are issues that you can talk about. And generally, I mean, it will also impart him saying, oh, I'm looking for a matured environment. Oh, there is population here. Oh, this is close to bus stop. Oh, people are looking for accommodation here. So these are decisions that some people will like. Some people will say, oh, I want an investment where I can also live and rent a part of it. So maybe that will change your neighborhood. Maybe you are saying, okay, my children are going to be growing here. I like this place, but I don't need all of the base, all the facilities. Let it be that I'm able to recoup a part of my, mortgage. So that's also in part how you make those decisions.
Mm-hmm. Wow, thank you so much, sir, because you've just, walked us through the entire process of like home ownership,
Yeah.
the importance of credit score, because I've had conversations with people where they're, in their first week on campus, they get all those credit cards and they
Mm,
think it's free money. But it's until after the fact they realize, oh, this is how impacting them. Maybe they want to buy a car or they're applying for a job and they're checking their credit history and they're like, oh, we cannot
yeah.
give you what you want because of a poor credit history. Because many people fail to realize that your credit history lasts for 7 years.
Mm,
So if you're graduating at 23, that credit history is going to follow you to your 30.
exactly.
So it's important the decisions you're making now. You could think, oh, I'm just 20 or I'm just 19, but those are, things that will follow the person here in Canada, you know. And so that's why conversations like this are important
Let,
so
let me
that
let me add. I told somebody, I said the credit score is your father's name, is your grandfather's name. It's indeed your great great grandfather's name because nobody knows your family here. They don't know you. It is the credit score that speak who you are. And it is the
mm,
credit score that make a banker, even while speaking without seeing them, they can give you facility just by speaking on phone. They check your detail and say, oh, this guy is kept a line for 6 7 years and is not a defaulter, so he must be very disciplined, so they
wow.
are happy. If your credit score is strong, you can get a favorable interest rate. I mean, they can give you and say, okay, this person will do well. But if they see somebody as a defaulter, and I think I need to mention something that I didn't talk about. You want to buy mortgage, don't have consumer loan before it.
Mm,
Somebody who were working very well without disclosing to me, were almost concluding. He just discovered I just went to go and take an auto loan. And every time you buy, you pay auto loan. You are paying 250 bi-weekly, like 500. I tell you, it discounts the mortgage that you are able to take by as much as 100,000.
wow.
So you can take 400,000 before, and suddenly they saw that you are paying mortgage of 500 on a monthly basis. No, you can lose between 100 and in fact 125,000 from the mortgage. And they will just tell you, oh, our approval cannot be more than 250, two
Mm,
whatever. And you're wondering, but you people told me I can take 400,000.
mm-hmm,
Now, sorry, you've missed that opportunity.
wow.
That's something that we need to take strong cognizance of.
Mm-hmm,
And a number of times, I had somebody also who we had an offer signed. We had, the only thing was just that I was a bit conscious when we needed to remove what we call condition, and I insisted that I wanted some evidence, and it turned out that this individual, the banker, was unable to confirm that financing,
Wow.
unknown that he had a problem with his last but one landlord. I
Wow.
mean, this individual lived in a house. He had issues. He didn't live in a way that they all settled everything. And when the landlord came in, they find out that there are some repair that needed to be done. So they spoke to him. Because he had left the house, he had packed out, he wasn't so conscious of it. He moved to take up another accommodation. And he lived in that other accommodation for about 2 years.
Wow. So this
So
is
he thought everything had gone. And
wow.
when they needed to reconfirm his credit score, every time they are checking, this thing is going up. We deferred concluding on the house till a particular time. And then every time, and I said, look, we need to investigate what is happening.
Mm-hmm.
Only to know that that previous landlord had taken him to receivership.
Wow.
Yes. Taking
Wow.
him to receivership, and before you know it, he was surprised. But when they discovered, they gave him, and they showed the mails that they have written to him. So
Wow.
when you receive any mail that has to do with your credit, I want you to address it as like as
Immediately.
soon as possible. Don't
Yes.
take it for granted and just say there's nothing they can do. They can hold you anywhere.
That is
In
so
fact,
true.
outside Canada, within this Western world, if there is a very stubborn person, they will pursue you to anywhere.
Mm.
So settle with your previous landlord, anybody that you have any credit transaction with, let there be peace between the two of you,
Mm-hmm.
and then you can enjoy subsequent transactions.
And I'm glad you brought that up. So receivership is also like you're saying your things are going to collection. So maybe you missed the rent 1 month and you just pack out. And you think, oh, this landlord do not chase. The landlord can go and report you to the credit bureaus and they say, this person owed me money for how many months
Yeah,
ago. And so then that is reducing your score each year if you don't do anything about
yeah.
it. And then they sell that your missed rent to another company that says they must collect this money back. So for Nigerians, I think there's something called OPay or something that
Mm.
they'll come and be searching for people to pay them their money. So it's similar to that. But here is on a record. Some jobs, they need to see you
Yeah.
have a good credit history. If not, they will not hire you. So imagine applying for a job, you've done well, only for them to come and say, oh, your credit history does not check out because in your first year in Canada, you forgot to pay rent 1 month.
Mm.
So
Mm.
that's why it's important to do things like this and check your credit score on a regular basis. Many bank apps now you can just go and check your credit score there, or there's websites online you can check your credit score for free and in a safe way. So you see what actually gets reported on you. So people don't
Yeah.
even know, and you can opt to check it. I believe with TransUnion and Equifax, those are the two Canadian credit bureaus.
Mm.
You can check your report for free once a year, because
No, you can check as many if you
yes,
are checking by yourself.
by yourself you
Yeah,
can
it
check as
doesn't
many
have any
times.
effect on you.
Yes.
A word on that. So when you check your score by yourself and it gives you 620, I always encourage people discount it,
Mm-hmm.
because what the actual figure will be lower. There
Mm-hmm.
will be some things that you did not take into
Mm-hmm.
consideration in their own professional way. There are a few things they will discount. So don't just come and argue with somebody when you have a professional system. You need to check your credit score. If truly you are ready to buy a house,
Mm-hmm.
if truly you are prepared for it, there is no way they will not check your credit score.
That is true.
However, you can encourage somebody, don't check it just carelessly,
Mm-hmm.
because each time you are checking, it may impact your credit score.
Yes.
However, you just want to buy a house, and within 1 or 2 months, that's not going to be significant.
Mm-hmm.
It will not be significant. 2 3 points, you recoup it again,
Mm-hmm.
if you don't have problem with your finances. So
Mm-hmm.
that's just very thoughtful that you brought it and
Mm-hmm.
made that clarification. Yeah.
Yes. And if to that point, some people might think, oh, I don't have credit card, I don't have credit score. It's a lie. Like things can be reported if you miss a rent, if you miss your phone bill. There are even people that they don't have, all they have is their checking account. And then they check and they see that they went to go and set up Wi-Fi. They have credit history. they went to buy phone and they said, oh, you can do a payment plan. They have credit history, but they were
Yes.
not aware of it, especially immigrant youth.
Let people not run away from credit
Yes,
cards.
they should not run
So
away from it.
if you don't have credit card, you don't have a basis to actually assess your financial discipline. So
Mm-hmm.
what you should not do, don't have too big an amount.
Mm-hmm.
I mean, you have a credit card 1,000. That's not bad. So what do they expect you? And I would recommend, don't spend beyond 250 there
Mm-hmm.
and fill it back before the next computation dates. So if you're doing that, because it's not a loan, it's just, oh, I need to do this transaction, because there are some businesses, they will only take credit cards.
Yes.
So it's not a confusion, I have a debit card. No, they want you to, because that for them is a report of how disciplined you are.
Mm-hmm.
So,
Even to buy your textbook
oh
sometimes.
yes.
They're like, if you don't have a credit card, you cannot buy this textbook. But you're like, you have the money. They're like, if you don't have a
No,
credit card,
no.
you can't buy the textbook. That's why discipline is important when you're, thinking about credit history. It's not something to be afraid of, but it's how can you be disciplined? Like you
Yeah,
said, it's your
yeah,
family's name
yeah,
that you're,
yeah.
showcasing with that. And there was a question about managing income. Because now we might say, oh, like buying a house, some people might maybe that's 5 years, but the same principles apply with buying a car. Your credit history is going to matter, so it's important you're managing that well. But in terms of, will I call it budgeting, will I call it
Okay.
saving, what kind of tips do you have for people to like manage their money well as students and even when they start
Okay,
working?
let me tell you what I've done to some young adults. Uh, Up until 2 years ago, parents can actually get mortgage on behalf of their, I mean, for their children here schooling. International students can actually take a mortgage. If you have up to 25%, you're not a citizen, you're not a resident permit, you're not anything. The government allowed that. Oh, the fact that you have a student permit, study permit, you can have a mortgage. And it's a lot of advantage, because what it means is they're advancing you the 75%. You just bring in 25%, and they will pay the owner of the property 75%. And then you'll be paying it. I mean, where you have not even been paying tax, you are not doing anything. So it's a lot of advantage. So the last 2 years, that is been suspended. Now, what will I say? Students cannot buy today as students. But when they graduate and become work permit holder,
Mm-hmm.
they are able to buy, provided your work permit is not expired in less than 6 months, so you can buy. So one of the things that I did for some students, and people can in fact do it today, I discovered that room is on average rented for between 750. I mean 750. But do you know that if you have just 6 7,000, two of you can actually own a house. You just buy a house that's just 200,000, and all you needed to put in for it will just be maybe 6 7,000 from each of you to take care of a 5%. And I'm talking now not just students, I'm talking people who have now started work, or they have a permit that allow them, to be able to buy a house. Two people can start as young people. So you don't need to grow as much as me before you start building. You don't need to, in fact, people don't even need to know that you are the owner of the property. Because what you're doing is you are the landlord and you are the tenant at the same time. So
Mm.
you work together with a very trusted friend. You just buy a small house, 200,000, and there are some of them that are very much around, very neat, 200,000. And by the time you do the computation, you just bring in, maybe this one brings 6,000, 7,000. You will do the deposit and the closing fee. And when you do that, what does it come to? On a monthly basis, your mortgage will be under 1,400. And so if the two of you are taking one room, it's like the same house you are paying rent for. You are paying. And when I say 1,400, I'm talking inclusive of your tax and utilities somehow. So you have just 700. There are many parents. In fact, when I had my one of my children here schooling, I didn't get to understand this because that time it was too easy. Every month we pay 600, 650. Can you imagine if for a 4 or 5 year program somebody had been paying himself or herself that money? By the time he finish, whatever the house worth, I mean a house that you buy for 200,000, in 5 years time, at the very, very least, that house would have increased by 20,000, 20,000, 25,000. I mean, meaning that you want to sell that house, you'll be selling at 225. But remember that even the money you are paying mortgage on, a part of it is reducing your principal amount. So in 5 years' time, maybe the loan that you took would have also reduced by 20,000. I mean, it means the gap between the 20,000 reduction and whatever you are selling it comes to you entirely. So it is possible for two people, for three people to buy a house and they live there comfortably. After all, where some people live today, they're also living with some people there and they don't fight. So now you just have well documented relationship that says we own this property together. And that's the beauty of it. There are risks for it, there are also benefits. And what is the risk? So that I don't want to hide anything from you. So if you are co-owners for a property and somebody is not so disciplined and his own credit is so poor or he's not bringing part of his own share on a monthly basis, then if there is a problem on that house, it affects all of you that have
Mm.
your name registered on it. But in doing that, you're going to be able to check on people who you think are disciplined and you can trust, to work it out. So people have done it and it has been very, very well. I mean, I have a client who bought a property for under 300,000 and in less than 5 years, that property was selling for over 400,000. Tell me what work somebody will do here with the gratuity that it will give you that work. So what I always encourage people is start small and grow into it. There are statistics to show that the world biggest number of billionaires and millionaires, 90% of them made those money from real estate, not stocks. They made that money from real estate. And that's the beauty that don't lose it. Not all these there are many investments now that when it's like you put candle, just put light on candle, when you want to blow away, it blows away. Real estate is solid, and that's something that the very comfortable wealthy individual, that's where they put their trust,
Mhm.
that's where they lie into when it comes to investment. So I want to encourage you, if you have the opportunity, you don't need the millions, you don't need the hundred of thousands. You can start with as little as 10,000 and then you can grow into it. By the time you see it beautifully, you will not even venture into something else. I know people who says, no, I don't want to buy a car. This is what I want to buy. We are not asking you not to enjoy. You can enjoy. Sometimes maybe you don't need that new car you want to buy. Maybe that car for 40,000, for 30,000, you can get a car that will still push you around for 7, 8, maybe 12,000. Maybe you can do that. So just be very streetwise.
Hmm. And thank you very much, sir, for this perspective because that's the reason we're talking about it. I think, home ownership is very big, but there are so many critical factors from credit score, to making sure you're paying your bills on time, to making sure if you're buying a car and that's what you need right now, what alternatives can you buy something in cash of like 12,000 versus put auto financing it because of the long-term impact. So that's why we're talking about this now. Yes, you can go out tomorrow and buy a house if you have the means,
Yeah.
but the journey to there is step by step and process, and that's something many immigrants you don't know. And so they end up in this phase of like they might never own a home until they're in their
Mm.
50s, but then that sets them back by many years, and then that creates this generational wealth gap, which is not what we want. So that's why we're having this conversation now, so people can get aware. So one of the questions that came in was, how do I budget as a student? Because being a homeowner is like you have to manage your finances, but I've heard of something called the 50-30-20 rule. So basically your 50 is for like your needs, like your rent, your groceries, things like that. And then your 30 is like for once, maybe you're ordering food, you're shopping, you're going out with your friends. But then like 20% can be for your saving and investing. And then you can also consider even doing something like giving. So you can change your percentage. So this is, you're preparing yourself to become an adult, here in Canada, because it's very different from back home where everything is cash. Okay, you have the money, you pay. If you don't have the money, you don't pay. That kind of thing.
I've met a very smart guy, and there is nothing scamming about his decision, really. So the beauty of this is again that even in the deposit that you're bringing in, the law allows gifts to support it. So you are a very responsible individual in this market. People, your uncles, your parents, they think this is a responsible individual. So somebody can gift a 5,000 to you. And let me tell you the analysis that is so sweet. When you want to, and I've done this before, when interest rate was about 2%, which is going down a little bit today, when interest rate was about 2%, 2.2%, if you pay for a house that is 1 million and you are renting that house, a house that is 1 million, you clearly will be required to do as much as 6,000 in rent. Maybe very conservatively, let's say 6,000 in rent, and that's what you're paying. You're paying somebody that money every time. But think about it. If you have to own that house, what they needed you to do, and today is also possible, is just a 50,000. And you pay the 50,000, and you're the owner of a house worth 1 million. So let's take two investments. Somebody has 50,000. Is going to buy shares, 50,000. Of course, there's no loan for that. You buy, you pay 50,000, and the worth of your share is 50,000. Another person took that one to a bank, assuming, because that's what is critical for the real estate. Your income must also be able to assert it. Maybe 3, 4 people can join together and do something like that. And they go and put 50,000 for a real estate. And that real estate, the shares, let us assume both of them are increasing at 10% per annum. So in 2 years, the value of the share will still be just about 62,000. If the real estate increases, let's even be very, very modest and say it's not 10%. The real estate is 5%. Can you imagine what the 5% on 1 million will be? He will buy this share from these people finally, and he will own it. So that's why the real estate is one of the, and for you to see how it's very encouraging enough, it is the lowest interest rate in the market. Mortgage rate is the lowest rate in the market because the bankers have come to see that, oh, it's not as risky as many other business. So let's not put too much pressure. This person is going to give us money for many, many years, 20, 25 years. And government has in fact created opportunity for young people that you can do your mortgage now for 30 years. It's not to put you in bondage, but it's just to make it a little bit light when you're repaying. Of course, if they give you 30 years, you can do it 15 years if you want. You can do it 20 years if you want, depending on what your income is. And what you just do in that instance will be for you to just increase your capital repayment. And every year you do that, you'll be seeing that the number of years will be reducing, in proportion to the impact of that income. So I'm saying, for example, somebody whose mortgage was supposed to be 1.4, just by adding 100 or 150 on a monthly basis to that income, to that repayment, you can reduce the number of years significantly.
Mhm.
And that's the beauty of what I will just use to encourage. You don't need to look for the big money. You just need a fraction as low as 5%, provided you have an income, because there is no sense for any banker to give you a loan if you don't have how to repay it.
Mhm.
So it is the how to repay that people needed to do.
Mhm.
Some people do a lot of businesses, they are not documented. You are not going to get it. So if I translate to how are you approved credit wise, they want a stable job. They want a job that is defined as permanent job. If it's a permanent job and you are not under probation, or you have exceeded your probation period, you can literally get, you know, it can be anything between times 4.5, maybe times 6, depending on the interest rate of your annual gross. Say, for example, my gross income is 600, I mean 60,000. Depending on what the interest rate at that time, I may be able to access as much as 240
Wow.
in mortgage or more. So that's the beauty of it. So because they have done it as okay, even if you are paying, it won't be a much strenuous
Mhm.
something for you. If your job is not confirmed, it's a different ballgame. If you are doing temporary job and all of those things, actually they will require you to do a consistent temporary job for like 2 years.
Wow.
If you do 3 years, then they will assume that whatever your last tax is to
Mhm.
be what it is, or they get an average. So if your job is not salaried and you are just into business, if you have documentation for it, maybe you need the documentation to show your income, indeed your profit as it were, for like 3 years. That's why it's easy when somebody is in paid job, because when you are in paid job, they are looking at your gross income. But when you are in business, they are looking at your net income.
Mm.
So if your business is not making profit, sorry, you are not able to make money
Mhm.
from it. So I want to encourage, as soon as you start working, as soon as you start working, let it be that you want to have a share in real estate, because the whole world is in real estate indeed. The whole world is in real estate. So you must be a shareholder there. And the beauty of it is, I told somebody, I say, you bought a lot. We call it lots here. In where I come from, we call it plots. You bought a lot. Literally, literally, you own it up and down. Yeah. And what can be more valuable than that? You own it here up. People have bought property that are turned out to be gold mine because there are minerals there. Whatever rule government wants to take, you will still partake in the benefit
Mm.
coming from it. So this is something that I want to encourage young people. The cars are good, but the day you put a number on the car, the value reduces. Good, like wine, property appreciates over time,
Mhm.
like wine. Some of the houses that are sold for 250 today may not be bought for anything more than 40, 50,000 when they bought it.
Wow.
So you see prices going up. We sold a house sometimes in Lindenwood, and the person bought it and he sold it 25 years after he had bought it.
Wow.
He sold it for less than, no, he said he bought the house for less than 20%, in fact 15% of what we sold the house for.
Mm.
15%. You can imagine. And it was a beautiful house. Very, you know how much that house would be in Lindenwood. He said he bought it less than 15%.
Mhm.
So you can imagine, and houses will not eat anything if you are maintaining it. You have a house, just maintain it like you are ready to sell tomorrow.
Mhm.
So it won't give you burden when you finally decide to sell, because you're already maintaining it, and there won't be major, breakdown on it.
Wow, this has been so great. And to recap, why we're using real estate as a key point is because um folks want to learn about real estate, eventually it's a goal people usually have. But to get there, things like your credit card history, your credit score right now impacts that. Are you getting an auto loan? That impacts that. The kind of job you get after graduation too, that impacts that, you know. So these are things to one, give youth, immigrant youth, hope about, okay, what their futures could be here in Canada, but then also help them prepare, whether it's preparing your mind, preparing your mindset or your bank
Mm.
account, or your habits, so that you are aligned in that way, and you can learn more. And so I encourage everyone to, more like an assignment, or
Yeah.
check out what is called the tax-free savings account, TFSA, the first home savings account. And so these kind of would support this conversation we've had today, for you to be more aware of what's available to you as immigrant youth here in Canada, to set yourself up for success in the future. Yes. Tio, do we have any extra questions online? Okay.
My last word is to give comfort that it can be easier than you think in making real estate investment. It's
Yes.
not that difficult. It can be much easier.
Yes, it can be much easier, like Mr. Fadipe just mentioned. And so if you have any question, um, feel free to put that in the comments right now. We already received some questions which, Mr. Fadipe already touched on. So we'll give that a few more moments. But Mr. Fadipe, thank you so much for, talking to us about the reality of it. Because many people come here and they're like, oh, I have free money. It's a credit card and they're spending it. Or it's, they don't understand the things they get into. For example, like maybe you're doing instrumental payments on your phone, or you want to buy something and they're like, okay, buy now, pay later. That is good if you are aware of it and you manage it and you're like, okay, in
Mhm.
6 months you pay it, not skipping any of those
Yeah.
payments. And understanding that too, with some companies, is a credit agreement. But you're like, oh, you're just shopping for a bag, but that's a credit agreement.
Mm.
Or like making sure that when you're buying your groceries, you're not buying food and letting it waste. What's the value of money? How are you using it well? And so things like this to help people feel more confident as they transition here, because Nigeria, many parts of the developing world is more cash-based system
Yeah.
versus here. We need to upgrade our mindset to a credit-based system and how we can use it well. So, seeing as there's no questions, we will wrap it up here. So, what we've talked about is real estate ownership, and how you can prepare your mind for that, even as a student in Canada, how you can start saving, how you can make sure you're having a good credit score, and identifying the kind of job you're getting post graduation, so that you can set yourself up for success in the future. And as always, I'm Chimdi, the host of the Chimdi with Shishit podcast, and this is Mr. Rotimi Fadipe, a licensed real estate broker in Winnipeg with connections to other brokers across the
Yeah, we
country.
were able to do transaction
Yes.
all over Canada because I'm a member of the Canadian Real Estate Board. Uh, and at any time you have transactions, Royal LePage, which is the brand and the brokerage that I work with currently, they're the biggest and they're the oldest actually among uh, fully Canadian owned brokerage. So we're spread all over the cities. I'm able to walk through any of our offices. I have clients outside Manitoba, sold houses to people in Ontario. I have clients in BC. I have clients in Alberta. And I'm able to also deal with people in Saskatchewan at the moment. And so, generally, all over Canada, we are able to make you happy. And like we say in Royal Page, helping you is what we know our best to do. Thank you.
Wonderful. Thank you very much, sir. And his contact details will be in the description of the video when it's uploaded after the fact. But I want to say thank you again, everybody, for joining us. And we hope this truly inspires you to start thinking about your future. Remember, your credit score lasts for 7 years. So the decision you make now is going to follow you for the long run. So keep that in mind and set yourself up for success here in Canada. Thank you and have a nice day.
Thank you.